Hi folks, and in my last video I was talking about SoFi and why it is in my opinion a buy. But did you ever ask yourself, what is the real reason why analysts are bullish about fintech companies like SoFi, Square, PayPal, Robinhood, Upstart or PaySafe for example? And why they will give great returns? No? Well, fasten your seatbelt and grab something to drink because I will tell you what is the real reason why the fintech sector will skyrocket in the upcoming years. And I hope PaySafe as well, because there I'm down 40%. So all the companies I mentioned before are fintech companies and are primarily technology companies that focus on the financial market. And the financial market is extremely exciting industry because a massive change is taking place here. Not only since the corona pandemic, and I'm not kidding, just look at the two graphs what happened to PayPal, Square since the pandemic. And the best, it is still not really known by the public. And therefore I thought, let's have a look together at the big idea study by ARK Invest or Cathie and what's about these developments and why they should massively benefit. So if you are still looking for fintech companies for your depot and you want to know more than 99% of the people who are invested in fintech, it is definitely worthwhile to watch the video until the end, folks, as Cathie's study reveals quite some impressive stuff. And if you find this video helpful, consider hitting the like button as the dang algorithm likes the stuff. That being said, let's jump right into it. ARK Invest assumes that the digital wallet has a market potential of 4.6 trillion US dollars and that above all PayPal's Venmo and Square. But not only these two, but we have as well many smaller companies and startups like SoFi, PaySafe, Robinhood, and they're going to change the entire banking history. Believe me. ARK Invest writes the mobile phones as the bank branches in users' pockets and handbags. And even if many of these companies have already had a very strong rally, they still have tremendous price potential. Since the value of the wallets per customer is currently only around $250 to $1,900. The actual value of the customers or digital wallet could be up, hold, 20,000 US dollars, folks, in the coming years. And such a development could happen very quickly, as we have seen in China. Mobile payments are mainly done by the cell phone and have literally exploded in China in a few years. And the annual mobile payment volume is now 3 times the gross domestic product of China. And meanwhile, the area of mobile payments and digital wallets is a worldwide phenomenon, and traditional banks therefore have a huge problem. There are currently mainly local players in the US. ARK mentions the Cash App from Square and PayPal as an example, but companies like Robinhood, SoFi, Chime are also growing very quickly. We see the same development in Africa, South America and Asia, but in these regions, e-commerce leading companies in particular like Jack Ma's Ant Group and Tencent are very active in the market. But now we take a look at the comparison with the development of a classic bank like JP Morgan, which is one of the largest US banks ever, and it had taken 30 years to accumulate 60 million customers accounts, and the biggest increase was always associated with takeovers. Square and PayPal did the same in less than 10 years, folks, and that without takeovers. So all by themselves. And SoFi in 2 years reached 2.8 million. Not too bad. The biggest problem for the traditional banking world is that they have a huge disadvantage compared to the fintech companies in the cost environment. While the traditional financial institutions pay between 250 and 1,000 US dollars per customer, and that is due to the classic marketing but also typical physical branches, where the fintech companies spend just 20 bucks to win a new customer. In this slide, ARK explicitly addresses the increased cost of branches. The offices are becoming more and more expensive for the banks due to the staff costs and building maintenance. And the benefits decrease dramatically as fewer and fewer customers come to the offices. And this reduces the value of the physical office. This we can see here in the States. I mean, how many branches are closing, right? But let me know in the comments if you see the same in your town or country. Would be really interesting. And this trend will continue to increase. Also just take this very moment. You are watching an awesome finance channel, right? Or video. So You do and you can basically take your finance into your own hands even without training, and there are tons of good videos on YouTube and informations in general to find in the internet. And that is also a reason why Cathie sees a very big risk in the traditional banking world, because digital wallets will change the current business of the classic banks massively, because the mobile ones could serve in the next few years above all as a really good opportunity and point of sales to make offers to the existing customers in area where the classic banks can no longer keep up. Just take SoFi as an example, how much they offer. We are already seeing this with online brokers. I mean, folks, who has a broker at a classic bank? Write it down in the comments. And is willing to pay the huge costs they have. Me? Definitely not. And you can't even trade any crypto at the classic bank. By the way, you will find a link to BlockFi where you can earn interest with your crypto in the description box below, in case you are interested. So ARK Invest believes that the fintech companies will continue to expand their product portfolio and will not only be mainly responsible for the payment area, but also provide other services, and this should also significantly increase sales and earnings potential in the future. ARK estimates that at the end of the development, a customer or digital wallet per customer will have an average value of $20,000. This value is made up of the individual product categories such as payment, insurances, lending, savings, accounts and deposits, cryptocurrencies and many other things, and should also have a great potential to serve as an opportunity to e-commerce. In easy words, how often do you go to the bank every day? And how often do you look into your broker account or your online account? Every time you enter the bank has the chance to sell you something, and it works the same way with the mobile app or online in the end. It will also be a very valuable product for the e-commerce company. Again, the growth potential cannot be assessed large enough. Just take me as an example. I have 4 different brokers, 2 for stocks and 2 for crypto. And even if we have seen a large growth in the number of mobile and digital wallets in recent years, we are still in the middle of a huge growth potential. The number of accounts will double in the next few years, and at the same time, the value of the digital wallets will increase massively. So the potential is enormous for SoFi, PaySafe, Chime, Square, PayPal and many others. So let's take a quick look at the companies that should benefit from this development. Square and PayPal were both mentioned several times by ARK in the study and are simply 2 giants in the US. So if you want to cover the fintech area in your depot, you can't avoid having one of these companies. But there are a lot of smaller companies in the US, like for example SoFi or PaySafe. So if you haven't seen my analysis to both of them yet, which I definitely recommend you do, as these companies I personally believe have a huge growth potential, simply click here and enjoy. For the others, that's it for today. Thanks for watching, and as always, stay focused and don't get greedy. See you next time.